Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about a Charles Schwab fund, what I feel is the only fund you actually need for your investment portfolio. We're going to talk about the Schwab Total Stock Market Index Fund. That's ticker symbol SWTSX. Now if we break into it, this fund's been around since 1999, you guys. So it's got a pretty long track record. Has about 16 billion in assets under management, and it holds over 3,300 companies. The beautiful thing about this is you have large companies, you have medium companies, and you have small companies. As you guys know, I'm a big fan of total stock market funds. A lot of people say S&P 500 are better, and everybody's opinion is their own. But for me, I want all parts of the market, and this gives me it in one easy fund. One of the nice things about this fund, you guys, is it has $1 minimum buy-in. I can buy $1 and open this fund, and not just in a basic brokerage account. Even if I want an IRA or a Roth IRA, I can start that with just $1, which is a big deal. So let's talk about the expense ratio. You guys know I am huge when it comes to expense ratios. Fees are the only thing we can control in investing, you guys. So keeping our costs down is important. This has a very low fee of 0.03%. So 3 basis points. Basically, you're paying $3 for every $10,000 you have invested per year. Now, obviously, this is an American stock market index fund. So as we can see in the map, all of the holdings are in the United States. If we look into the breakdown, though, first of all, remember this is a market cap index fund, so the bigger companies get a bigger share of the pie. If we look at the actual breakdown of the market capitalization here, we see that giant caps make up about 42%, large caps make up 30%, mid caps make up about 19%, small caps make up about 6%, and micro caps make up about 2%. So you have a nice fund that gives you all size companies in one. Now let's take a look at the sector holdings, you guys. And the biggest sector holding is information technology at about 25.7%. Second is healthcare. The next is consumer discernibles, and then financials, communication services, industrials, consumer staples, real estate, material, energy, and utilities makes up the smallest one at 2.5%. Now, let's talk about the top 10 holdings. The top 10 holdings here are what you would expect from a market cap fund, right? First one, Apple. Next, Microsoft, Amazon, Facebook, Alphabet A, Alphabet C. Those are Google A shares and C shares. Tesla, Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson. Big companies everybody knows, right, you guys? And now, just those 10 holdings actually make up a little over 22% of this fund. So that shows you that the bigger the company, the bigger share of the pie it gets in the investing in this fund. All right, so let's take a look at how we've done with this fund over time. And we'll compare it. Now, Morningstar considers this a large blend fund because the majority of it are large companies, and blend because some are value companies, some are growth companies. Blend, so it's got both. Okay, so if we look at the 1 year, for the 1 year, you guys, now we're coming off the end of the drop from COVID, right? So it's up, of course, 43.90%. In the 3 years, we're at 17.92, almost 18%, you guys. 5 year, 17.27. Now, these numbers seem awfully high, and they are. Remember, we've been on a 10-year bull market, and it's reflecting in these prices. The 10-year, 14.14. But if we go back to the inception date, back in 1999, you see we dropped down to 7.99%. Now, you guys, 8% is pretty good. Remember, if we go back to 99, that means we took the .com crash and the housing crash of 2008 are both in there, so obviously the numbers are more realistic. Remember, the total stock market returns on average 8 to 10%, but it doesn't do that every year. Some years we have way above that, some years we have way below that. That's something we have to remember. But remember, we're long-term investors. We're buying this fund and we're holding it, so we're not worried about short-term fluctuation in prices, because we know that if we hold on to it long-term, the U.S. stock market is probably going to pay us off. So you guys, let's take a look at if we had gone back. Let's go back 10 years to 2011. And let's say I invested $10,000 into this fund, and all I did was leave it alone. I didn't add any money to it, but I let all the dividends reinvest automatically, which is what they do when you start it, right? Unless you tell them not to. That $10,000 would have turned into $37,500, you guys, with me doing nothing and adding no extra money the last 10 years. So it's more than tripled. It's almost quadrupled, you guys. Pretty an amazing answer to what happens in long-term investing. I think if you're in the Charles Schwab family and you want to use an easy index, if you're a beginning investor, or if you're an investor who just doesn't want to spend a lot of time doing homework on stock market investing, this is a single fund. You can put your money into it, put it on autopilot, keep adding to it, and over time it will grow and reward you for your retirement. All right, you guys, I hope you got something out of this. If you did, do me a favor, drop me a thumbs up. It really helps the algorithm, gets my videos out to more people. If you aren't already subscribed, do me a favor, hit that red button, ring the bell. You get notified every time I make a new video. All right, we'll see you. Thanks.